From here on out, I suppose the most pertinent question is, where are we? Furthermore, I believe Dan agrees with me that we're 10 times better off than where we are now. In my opinion, the summer was the turning point. According to Larry Fink, Bitcoin was a significant worldwide asset that was traded all over the world, transferred a substantial portion of the world's equities and brokerage accounts holding between $50 and $100 trillion to Bitcoin. This is the first time that financial institutions in New York have shown any interest in speaking with me about our work since I developed the concept for the fund in the middle of 2019. Crypto asset prices are expected to rise further as the bull market persists, according to Tapiero Scaramucci, managing partner of Skybridge Capital, an alternative asset manager and investment advisor, and Dan Tapiero, CEO and managing partner of Tent Holdings, a growth equity fund that invests in companies in the digital asset ecosystem that are in the middle to late stages of their development. According to Tapiero, who predicts a digital asset market size of $1 trillion, the interest in Bitcoin and other cryptocurrencies by BlackRock has changed institutional views in the US significantly. Many people looked down on the Bitcoin industry until about the beginning of last year, when it was still widely believed to be run by crooks and aimless teens. After the US Securities and Exchange Commission approved a Bitcoin ETF with multiple spots earlier this year, and BlackRock's iShares Bitcoin Trust broke records, this attitude altered. Investors have now seen the tremendous potential this sector has, particularly when contrasted with more conventional assets such as bonds and stocks. Tapiero claims that hundreds of institutional investors are rushing to buy cryptocurrency before the opportunity passes them by. During this bull cycle, he predicts that Bitcoin will reach $100,000 per coin, and during the bull cycle of 2028 to 2029, he predicts that Bitcoin will reach $350,000 per coin. Numerous opportunities, many diverse ones. Bitcoin is, in my opinion, the most valuable asset I have ever seen, according on the hindsight test. Surely Dan would concur with my assessment. From what I can tell, it has the potential to be the most valuable asset ever. I suppose the genuine inquiry is, where do we stand moving forward from here? Furthermore, I believe Dan agrees with me that we're 10 times better off than where we are now. Due to the high degree of uncertainty, I will not place a time limit on that. While there is some unpredictability, the adoption rate is a good indicator of progress. Mr. Tapiero occasionally presents excellent slides detailing the adoption rate from the previous year. As far as the comparison to Web 1 is concerned, I presume he had us in 1998. Bitcoin has only had a 5% or so acceptance rate since around the middle of 1999. Just think of the possibilities if we reach 20% or 30%. Okay. So this is the best asset ever up to now from 2009 onwards, but will it ever surpass Nvidia and other excellent assets? In my opinion, it will. My credibility and livelihood are clearly on the line because of it. In my opinion, the summer was the turning point. According to Larry Fink, Bitcoin was a significant worldwide asset that was traded all over the world. Contrast this with his position 2 years ago when he claimed Bitcoin was used for illegal activities including money laundering and fraud. Everything about the $10 trillion wealth manager is common knowledge. That there would be an ETF and that they would be a major sponsor was obviously known to him before he made those remarks. The release of all 11 of these ETFs on January 11th was a watershed moment in terms of the future of the market. Bitcoin has essentially been onboarded by the global equity and brokerage communities, adding an additional $50 to $100 trillion to the available capital. In the past, you had to sign up for an account with Coinbase, Kraken, or Gemini. Even if some were uneasy about it, today anyone over the age of 50 can own Bitcoin with the click of a button, even if they already have stock accounts, brokers, and RIAs. So we anticipated that would have some impact, but the way it has changed people's perspectives in the area is far more significant. I can speak from my experience when I say this: we have never promoted our funds. Despite our current 1.4% AM, none of the 10 T1RT funds have targeted us-based institutions with direct marketing efforts. We have a couple of institutions, but they're all through people I know personally. Among the many investors are the Teachers of Texas and the MERS Pension Fund from Michigan. We haven't even approached them with any marketing material since I came up with the idea for this fund in the middle of 2019.
I am
being approached by financial institutions in New York that are interested in discussing our services with me. On top of that, it's fascinating. No such reverse inquiry has ever occurred to me. And to top it all off, they're actually getting things done fast, which is almost paradoxical coming from a US institution. This person receives the exchange-traded fund. Their client's interest is tracked through the ETF. Finally, I'd like to mention that in my opinion, Bitcoin and Ethereum are well-established assets. Their value is fundamental. They will have ETFs for that reason. The Ethereum Trust Fund ETF is equally crucial to the future in my opinion. Alternative cryptocurrencies are more akin to venture capital initiatives. They're guesses more than facts. Solana isn't quite a core asset just yet, but it's on the right track. Because of this, I am extremely bullish when it comes to the US institutional world, which has been the most sluggish to catch on. They are now beginning to investigate the engine. Other institutions exist for you. Personally, I've been associated with that on a direct level. I oversee the School Endowments Investment Committee and serve as its chair. I have already brought this up several times. Additionally, we received that endowment from Zero, which was the renowned Lensis Caceres, a focal point many in the space community are familiar with his name. We reached 1% with this $500 million endowment. In the middle of 2019, we invested 1% in Bitcoin and ETH and a small amount into venture capital. Furthermore, that 1%, that 5 million, is significantly higher. Let's estimate 50 million. It is clear that we were the pioneers among us high school endowments when it came to direct investment. I also believe that our high school or university was among the first to make a direct investment. Also, it's been quite consequential. Not only that, but we only gambled with 1%. Plus, it has helped us beat out the majority of our competitors. Endowment's resilience in the face of illiquidity risk is crucial, in my opinion. Trying to trade this space is, in my opinion, the worst possible thing to do. Unless you're running a 24/7,365 enterprise with 20 workers on staff. I was a traditional portfolio manager for nearly 20 years, doing things like daily mark-to-market and being on the front lines of multiple hedge funds, including my own. Furthermore, this is 10 times more complex and 10 times more challenging. You need to get involved in the details, but the payoff is 10 times greater. On the other hand, you can do what I believe is best and just sit back, possess Bitcoin and Ethereum on a 10-year hold, and do nothing. However, I feel as though Dan and I, after 35 years on Wall Street, have aced the last exam our senior year of high school or college, the 5 days leading up to the examination. Very well, that is Bitcoin. So I think he sees it the same way I do, as a valuable item that society may use. This asset is growing in value. 2 study reports, one on Bitcoin and one on Ethereum, were recently released by the Chinese government-owned bank ICBC, which you may have noticed. Chinese communists own the bank. They are informing you that they intend to begin making use of, or at least consider making use of, these digital assets. As a last point, I feel it is crucial to emphasize that this is still in its infancy. Also, your younger self did not do what you do as an adult. When I was younger and someone handed me a portfolio to manage, I mentioned that I had a portfolio that needs managing, which is something I'm ashamed to confess. My employment is secure. In order to keep my job, I need to complete tasks in my portfolio. Then again, when you get older and look at your portfolio, you realize that you're actually getting paid to do nothing. I need to do nothing until I can persuade an endowment like Dan's or my retail clients to sit back, let me deal with this, and not become involved. On top of that, it's not easy for portfolio managers to achieve that. When I was first starting out, I was terrible at it.